Welcome to the Multifamily Investor Playbook. Today we have another special guest, and in this case, this is actually a guest from Faris Capital Partners. Now, many of you, if you're a current investor or perhaps just attended one of our webinars, have probably had an opportunity to meet this person. But today we're going to be spending some time with our Senior Vice President of Asset Management, Georgia Pitrone. She's had over 20 years experience in the industry in property and asset management. And her role at Faris Capital is to look after all of our investments, be a liaison with our property managers, be on site on a regular basis, just ensuring everything is flowing smoothly and our business plan is being executed properly. So, today's episode, we're going to dig into just kind of the basics of asset management, give you a kind of a view of what that really means and what that looks like and how it benefits you as an investor to have that role in house. Now, if you're interested in learning more about investing, or you want to maybe kind of just learn a little bit more, review a sample deal, or even book a time to talk, go to fulloutinvesting.com. It's a great resource. Once again, that's fulloutinvesting.com. There's a video you can watch, a sample deal, and once again, you can book in that time to talk. But Georgia, welcome to the podcast. Good to have you today.
Hi, John. Thank you for having me.
Yeah. So some of you, if you've been watching our YouTube channel for a while, might remember that George and I actually did the
Mhm.
first couple of podcast episodes together. Mark was kind of busy with some other tasks, and we wanted to kind of test it out. So for those that have been here since the beginning, you'll be familiar with Georgia. But let's just start with the basics, Georgia. For
Mhm.
someone who's never heard the term before, what exactly does an asset manager do in an investment firm like Faris Capital Partners?
Yeah, sure. So, we wear a lot of hats, right? We're really involved from the very beginning and then carrying out the business plan all the way to the exit. So, ultimately, my job is to make sure that the plan that I've helped develop is executed at the highest level. And so that means getting involved, evaluating the deals as they come in, making sure it's a market where I think we can be successful, making sure our underwriting is realistic. Sometimes Joe, he pushes where he needs to push for those returns, but ultimately I want to make sure that the business plan is something that we can execute on. Understanding the market, evaluating the market, getting all the teams lined up, and then working through the closing process with our team, and then ultimately once we close, taking that business plan and executing on that, and making sure that we're we're serving both of our customers, our residents and our investors, and ultimately making sure that we're getting, I don't like to say meet returns, exceeding our returns, going forward.
No, absolutely. And I think, one thing I wanted to kind of pause on is one of the things that I think makes this a little bit unique is we really have like a 5-person investor committee. So as you
Right.
mentioned, Joe does that initial underwriting. Now he's looking at CoStar, various data sources. And so looking at rent growth projections and the demographics in the area, the economic demand drivers, et cetera. But at the end of the day, we have to operate this deal right. So you
Mhm,
kind of bring that in. It's like, okay, so this all looks great, but I think maybe we're a little aggressive here. Maybe
mhm.
candidly, sometimes, maybe we're not as aggressive,
Right.
right? Because, we've acquired a number of deals and, you learn from those deals, you bring your past experience in. And so, you have that kind of deep understanding. And then, we have our director of finance, Mark, and myself. And so we
Mhm,
all bring our own unique perspective. And so I think that's worth pausing on just because, some funds, it's one person that ultimately makes that
mhm.
decision, right? And, I've heard stories, right, where teams are saying, hey, I don't know about this deal, but for some reason, the person at the top likes it and pushes it through. And
Right.
so our kind of view is like, if one has a veto, right, like we can kind of pause on the entire deal. It's not to say it's dead, but it's like, let's really slow down. Let's go maybe revisit the property again, tour some more rent comps, and just
Mhm,
really ensure that we're making the right decision here. So this is a question I think too that I'd like to unpack a little bit. Is sort of once we go under contract, a big part of your role is really
mhm,
that due diligence process, right?
mhm.
So maybe walk investors through
Yeah.
what that really looks like, in terms of the third parties, our own inspections, our property management company being on site, bids, all of that good stuff.
Sure. So that, our due diligence really starts from the day that we've identified a deal. And I've already started digging into the rent rolls and the trailing 12 and the financials, trying to uncover and identify some of those speed bumps and issues that we might fall trap to, making sure we're accounting for those things, but also noting that that may be something that during our DD period after we're under contract, that 30 days, that I can dig in a little deeper. For example, if on the trailing on their financials for the past 12 months, they've had a lot of, plumbing repairs, and that means that I need to have a plumber on site really digging in as to why. Um, so after contract, I really have a sense of what we need to dig into on a much bigger level. But on a standard, we have our third party, we have environmental that we have to do, appraisals, surveys, zoning, all of those things, which are typically lender required, but also ensures that we're getting what we think we're buying, right?
That's right.
And
Yeah.
that there aren't any zoning restrictions or violations, and that the title's clean and so on. So, I initiate a lot of that. I make sure those get done. I make sure they get done on time. I make sure that if there's any issues or questions that the lender has, that those get satisfied and that title signs off on it, so that when we close, all of that stuff is clean and we're ready to go. I also evaluate all of the findings that come in and make sure, for example, on our property condition assessments, make sure that any findings that the lender might identify that we need to take care of post close, that we've accounted for that in our capex, and making sure that, yeah, I kind of knew that was going to happen, or if I didn't know that, why, and digging into kind of an after action, right, to make sure on the next when we find it. And then on a third party perspective, we have our third party manager, Asset Living, who will be managing all of our assets very soon. Very excited. And they come in and they do a full lease audit. And that full lease audit goes through every single lease, looks at demographic, looks at lease violations, looks at expirations, makes sure that the rent roll ties to that lease because we value that asset based on that rent roll. And so if there's things that are not correct, and not represented correctly, that could change the value of the deal, right? I've seen it
Right.
happen. So we make sure everything is clean. And then if there's corrections, for example, if a lease calls for security deposit of $500, but the resident never paid it, and the seller never collected it, well, they need to collect that and make sure we get that at closing. We're not going to do that post close. So just little things like that. But we also put together a full unit walk, and we walk every unit. We identify any immediate work order items, any discoloration, we call mold issues discoloration. I think it's a kinder word, and a less alarming word. But that also making sure that all the appliances look in good shape, especially on a value add deal, which is what we do. It gives us a sense of how much I think I'm going to have to spend on that unit, or if I need to renovate that unit right away. Also helps us identify any residents that might have some lease violation, hoarders, um, you know, cleanliness, and make sure too that if they're showing that the property is 100% occupied, that every unit's occupied, right?
That's right.
Um, and then, from there, we also have our third party vendors. We have our general contractor on site because we've already identified our plan on what we want to do, from amenities to renovations to remodeling the how adding playgrounds or whatever the case may be. If we know we have roof issues, I have a roofer on site, and so all of those vendors are on site within the first couple of days of DD, and we usually get reports in the 2 weeks. We do a full roof evaluation, so they come in and give us the age of the roofs, identify for 10 years out, any repairs that we might need or any immediate replacement. We have a plumber come out that cameras all of the plumbing lines. And then immediately post close, our standard is we get all the lines jetted and cleaned, make sure everything's working because that's going to help us long term. So my job really is to organize all of that and to make sure that everybody understands what their action items are and what their scopes are, and then making sure that all the information I get back supports all of that. And then we kind of dissect all of it and make sure that it is what we thought it was going to be and make sure we're planning accordingly.
Yeah. I mean, you're really like a detective, right? You have to
Yeah,
go in and kind of
exactly.
look at everything, you trust but verify, right? And you're right.
Right,
We see often it's not like, a major thing, but you will see sometimes where the rent roll isn't matching up with the reality of the
right.
lease audit, right?
Mhm,
Or to your point, we're being told it's 100% occupied and then we're on site and there's 8 vacant units. And
that's
it's
right.
like, well, hold on. And so yeah, and I think another key point you mentioned is that the due diligence really doesn't start at LOI. It starts
Mm-mm,
when we first identify the
mhm,
property. And so I think I've shared this on another episode of the podcast, but I've often been shocked where a lot of times the brokers will stack their tours, right? So they're like,
mm,
30-minute blocks. So they can just be out there for an afternoon or a day and do a number of tours, right? And one time, and for example, was on our Noonan deal that we're closing here shortly. We had this 30-minute block. I did the tour with the broker. I was there, I think, approximately another hour because on this particular property, we weren't really clear on the age of some of the mechanicals. And so I
right.
said, yeah, look, I'm just going to walk the property and take a
Mm,
photo of every single HVAC compressor. Usually not all, but a lot of them will have the manufacturer date right on
mhm,
the label there. And I saw 2 or 3 tours occur while I was out there still walking the property, right? And so, by going more in depth on the front end, it helps refine those numbers. So there's fewer surprises, obviously, at our due diligence, but
right,
things do come up, right? And so sometimes they're positive things where maybe go, gosh, we didn't realize that. That's actually going to save us some money. But over here, there's another thing. So,
right,
really going through that whole process, from really the start, the first time we're on
right,
property due diligence begins, right? It's not really over until closing in a sense. In other words, we have to monitor the performance of the property even beyond our, sort of defined due diligence period. I know you have a depth of experience, but what I found at least is some operators kind of step it up, where they're like, we want to make sure we have a really great closing. So you'll actually sometimes see the financials improve a little bit, right?
mhm,
But we've seen the other where, we had one recently where it felt like they kind of just, took the foot off the gas
yep,
pedal. The property manager, we learned after closing, wasn't even on site for like a week or two prior to closing.
mm,
So, we can solve for all those problems,
right.
but managing through that process, so it really doesn't end until we close. Now, kind of shifting gears just a little bit here, but in your role, how do you balance sort of the needs of investors, right, with the realities of on the ground property management?
Right. Well, I think I said earlier that, I really have 2 customers, right? I have our residents and I have our investors. And I've learned throughout the years, and even more so now with Ferris because of our core values and how we build communities. And, I think I've said this before, we don't just, you know, we do what we say we're going to do, right? We don't just put it on paper and say that we have a genuine love of people. We really do. And you and Mark empower me to be able to make those decisions to help our community. So, in my finding, especially now with Ferris, that if I take care of our first customer, the resident, then it just flows through to the investors.
That's
A
right.
happy resident pays their rent, refers people, stays longer, renews, takes care of the property, takes care of the units. And then that results in stronger NOI, less bad debt, less delinquency. And ultimately that flows through to a happy investor because we're exceeding the returns that they expected on their investment.
That's right. In a way, it's almost like the broken windows theory, which is, I guess, in New York, they realized that if a neighborhood had, buildings with broken windows, people in that neighborhood sort of acted
Mm,
accordingly. So you'd see more graffiti, more,
mm,
I say street crime, but, guys just drinking on their front stoop and
mhm,
smoking cigarettes or whatever. But, they went in and they fixed the windows, they cleaned the streets up a little bit, and people started acting differently. Right. And so that psychology. So, by refreshing the amenities, putting
right.
in new lighting, renovating the exteriors very quickly, we improve the overall quality of the building in such a way that it helps with that kind of internal pride that that resident feels coming in. And, in a sense, they just act accordingly. They want
Mhm,
to take care of this property a little bit more. Where, we've toured primarily rent comps or maybe an acquisition that, because we've talked a lot about this on the podcast, Georgia, but we kind of like a problematic building where, it's
Mhm.
cash flowing, it's like performing okay, but when we walk the property, we see trash and, maybe there's only like one,
Easy.
of the waste baskets for the doggies or whatever. And,
Mhm.
you kind of see some bad reviews and it's like, oof, that's awesome. We can fix that.
Oh, yeah,
Right.
I love it.
Um, but I think an important key here is you're dead on. I mean, what we do at Faris Capital is we buy a business. The business just happens to be an apartment building. And so who is the end user of that business? Who's the real customer of that business? It's the resident. And so by taking care of that resident first, that in turn takes care of the investors because of
Right.
all those things you mentioned. They're paying their rent on time. They'll increase, accept those rental increases,
Mhm.
renew, refer, et cetera. So,
Right.
I would say that's one thing I think a lot of operators do miss.
I
They think
agree.
more about the investor. And it's not to say we don't. We think a lot about our investors and
All
how
the
do we
time,
make
you
this
know
the
I
best
do.
experience?
Yeah.
Yeah, 100%.
Yeah.
And ultimately, like, I mean, you're putting your own, we always talk on the podcast,
Yep.
Mark and John put their own personal capital in these deals. But guess what? So does
So
Georgia.
do I.
And we don't make her do that. She
Right.
chooses to do that because she believes in the deal so much. But, by having that, it's really a force, mechanism to make sure that we truly deliver. But yeah, it's something where we view it as an opportunity. That resident focus really helps in terms of the return. So, you know, kind of on a day-to-day basis, a week to month basis, like what are some of the key metrics and performance indicators that you're studying to ensure that things are moving along? Right, at a certain point we kind of execute on the big lift with the business
Mhm.
plan. Now along the way we're still renovating units, but like the heavy lifting's usually in the first 30 to 60 days with the exteriors and the amenities. So what are some of those key performance metrics you keep a close eye on?
Yeah, I you know me well. I'm thinking, 6 months out, right? And I'm a proactive planner and I want to know what the exposure is 6, 9, 12 months out. So I'm tracking that exposure really. Notice to vacates, renewals. If we had 12 renewals in 1 month, what was our retention? And if we didn't have a strong retention, why? Was it rate? Was it customer service? Whatever the case may be. But really monitoring occupancy balanced with our need for inventory to do those renovations. I track that every single day. We report on it in our huddle every day. I know exactly what's coming up. I have access to all of our software systems. I'm in there every day. You ask our property managers. I'm constantly texting, emailing, going, "What happened here? Why didn't that person?" Right?
Yeah.
Because ultimately that results into our financial performance every month, and every year and every quarter. Right? So staying on top of that, also delinquency, evictions, being sensitive, knowing that, um, for example, on a property that we're taking over, we're going to have some time, and we plan for it, where we're going to have a little bit of bad debt, we're going to have a little bit of vacancy, which I look as an opportunity to renovate. Again, balanced with the need for occupancy for revenue, but really monitoring those types of exposures, and then really work orders and reviews.
Mm.
I keep my finger on the pulse of our properties, and I know when our residents are happy and when they're not.
Yeah.
You yourself respond to all of our Google reviews, which I think is incredible. I guarantee no other operators do that, good
Mhm.
or bad, right? You and
Yeah.
I both. It's kind of a joke who gets who lets who know first that we got a
Yeah.
review, me or you, right? Because we're
Yeah.
on
Yeah.
it.
Yeah. Yeah. Yeah.
Um, but that translates into reputation, which translates into higher rents, which translates into bigger revenue, NOI, and returns, right? It all is partnered together.
That's right. To add to that, those surveys, right? Kind of that
Mm,
resident satisfaction score, right? So even beyond reviews, we're surveying the
mhm,
residents, sort of like after they sign the lease, after they move in,
right.
6 months in, right? And by asking, you can sometimes even reveal a potential, challenge before it becomes
Mhm,
one, right? So, maybe, it happens, right? People make mistakes. A property manager dropped the ball or something, and, we failed to handle a maintenance request timely. We have guarantees around that, as our listeners
right.
know, where if we don't get it done at a certain period of time, we owe them a gift card.
Mhm.
But, it's just that idea that by asking, we can reveal, those frustrations, solve for them before they
Right,
become a negative review.
right,
And, frankly, I'm thinking back, I'm like trying to remember. I feel like I can only remember one or two negative reviews we've even received on our
right,
properties really in the past 12 months, right?
right. And those were
Um,
typically assigned or associated with disgruntled employee,
well, that one, that's
that
right.
one,
Yeah, yeah, yeah,
or a
yeah.
situation where we had uh, a vendor that was trespassing a towing company, and they tried to blast us on reviews. But even if we do have a review, like, for example, we had one in Largo, and it was a situation that by the time we reached out to Corey, who's our property manager, she was already on it. She had already taken care of it, and, she had addressed it and had t and it was we had done everything that we could in our capacity. It was the local utility company. We had no control over them not being able to restore power, but yeah, we'll tackle the good and the bad. But I'm also a believer too that it can't always be rainbow and sunshine, right?
Right.
And so I dig a lot, and I'll ask a lot of questions. And there's got to be residents that aren't completely happy. And so when we're visiting, I want to know, if there's you and I both walk around, talk to all the residents, because that's when they'll tell you the truth. During DD, they'll tell you what's good and what's bad. That's where we find out a lot of the skeletons, right?
That's it.
Yeah.
No, for sure. Yeah, I always say a company that doesn't ask, for feedback
Yeah.
already knows the answer. And
True.
so, that's how I think about it. So, yeah,
Hmm.
that's wonderful. So, when we look at a deal, we're always trying to kind of, what is the story of the deal, right? Like, what is, and part of that is, okay, how do we, share that story with investors such that they're excited to
Hmm.
invest? But when we acquire a new asset, what is your approach to sort of that business plan, setting those priorities for renovations, and then
Hmm.
obviously even further down into leasing and operations?
Yeah, so, again, we start at the very beginning when we're evaluating the deal. When I look at something, I look at the market and how can we add value to that market? What is gonna be our niche? If, for example, we're in a market where there's just oversaturated with Class A, that the rents are through the roof, or and they have just completely affordable HUD properties, Section 8 properties, but there's nothing in the middle for that working class demographic, that missing middle. That's our niche, right?
Yeah,
And you've noticed, I mean, in all the deals that we're in, there's that miss where so that's our story, is being able to create beautiful Class A living with affordable pricing for that working demographic. And that's really what I believe it. My husband's a fireman, my son is a policeman,
yeah,
my daughter-in-law is a teacher, and they don't make a lot of money, but they deserve to have a beautiful place to live. And so defining that story when we're looking at it, how can we fit in that market and what's going to be our niche? And then price accordingly, right?
that's right.
Yeah.
Well, it's funny. I think back, yeah, your son there being a detective, I guess, right? You guys can share some of your strategies for
Right.
uncovering things, right? And getting into the details. So very cool. So in terms of like good asset management and practice, like how do you keep everybody from like say vendors, the on-site property management team aligned and accountable?
Again, I'm a proactive planner, and I talk to our teams every week. We have a operating call every week. If we're during transition right now for Georgetown, we're talking every day. And it's communication, really, really is the key. There's certain reports that they have to provide to me every week, statistics that they have to report. I have access, I can run reports myself. But it's also from those, it's not a meeting for the sake of having a meeting. It's a meeting going over action items and creating action items. And then it's just a constant checking off the list and adding to the list, because we're never going to be done, right? We're
No.
always going to raise the bar. We're always going to want to do better. We're always going to want to do more. And I hold people accountable, and I have very high expectations, but I also hold myself to that standard, and we
Yes.
hold ourselves to that standard, and, if so the people that work with me know I'm fair, but, I'm tough, and I make sure that things are getting done on time, and, I'm a planner, very much a planner. I'm a list person, but communication really is the key, and making sure that if I say something or give somebody a directive or give a request, that I'm very clear about what it is I need done and when I need it done. And I'll send out calendar reminders for everything, because I don't want it's a trigger, right? I don't want people to forget that I need this on this date. So here's just a little reminder. So it's just keeping everybody on point. But those meetings and the communication, and then being on site, and visiting the properties and seeing what they do day to day, I think is really key as well.
No doubt. Yeah. I mean, so much can be gleaned from those on site trips, whether that's just a conversation with a resident that
Mhm.
uncovers an opportunity or a good idea. But also just, communicating to the team, like, you might not know when we're coming by,
You
right?
don't.
So
That's
don't
right.
just like, what I always hated, and there was this great story where this was a number of years ago, and I'm not even sure if this particular CEO is still at Target, but the article that I read was in Inc. magazine. And so Target had this great growth. They had kind of redesigned, and like, they were putting in like clothing that was a little more like fashionable. And they were trying to say,
Mhm.
okay, Walmart's over here, we're up here. We're kind of for like the middle class and I guess the lower upper class or whatever, but it started falling off a cliff. And what happened is this new CEO comes in, and the one major thing he changed is he stopped announcing when they would have store visits. In
Mm.
other words, what used to happen is somebody would say, well, in 3 months, the guy's coming through. And what do you think happened? They got the place in tip top shape. Everything looked perfect. He'd
Yeah.
come through and say, wow, everything's great. And then go on home, where this CEO would just pop in and just see where things are at, when they weren't expecting it. Right. And
Right.
so we're not trying to catch cheap people in a trap. Right. But it's that idea that it shouldn't be, oh, John and Mark and Georgia are coming in town, we
Right.
better step it up. It's like, no, you should be stepped up all the time, like
All
a
the
hundred
time.
percent of the time. Right. And so don't step over a piece of trash on the ground on your way in the office. Pick it up, throw in the waste bin. Right. These little small things add
Mhm.
up. And goes back to that broken windows theory. If I were walking to my apartment building and there were 17 cigarette butts and Coke cans and beer cans all over the floor,
Right.
I'm going to treat the property a little bit differently. Right. And we view these people, it's like no different than owning a home, that same pride that they feel they should have. Right. Even though they're, maybe renting versus owning, they should still have that same high quality living experience. So, um, in those first 90 days, listeners to our podcast are pretty familiar with our 28-day
Mhm.
full out transformation concept. But like in those first 90 days, what are the most important things you focus on,
Mm.
immediately after takeover to sort of drive momentum in those early weeks and months?
I think the 28-day transformation really is creating that buzz day one. We just closed on Georgetown, and we were trimming trees before the ink was dry, right? I mean, we were there, we were going. Um, but I think also, we're inviting ourselves into a community, hopefully that's already established, right? And so I think we go in and try to create some goodwill, some reassurance for our residents, letting them know that, look, we're here to build a community, we're here to partner with you, introducing ourselves, introducing our core values, but also on the flip side of that, setting the expectations about, this is when rent is due, and this is the process of doing these things. And we're going to work with you, we're going to help you. But these are our expectations, but here's what you can expect from us. And I think creating that expectation and that standard going in the first 90 days, I think is really critical. But also being respectful and understanding that, a lot of people have been there for a long time. We've had residents in Georgetown that have been there 25 years, and I'm respectful of that, right?
Yeah.
And we want to build around that and enhance that, not take over and redo. So, and it's been successful for us. I mean,
Yeah.
very successful for us. So,
Yeah, even down to, when we host our resident events, what
right.
you'll often see is, oh, here's some wine and cheese or whatever. And,
Cool.
It's just the property manager there, and there's not a lot of excitement. Where we bring in food trucks, a Kona ice truck, do
Mhm.
some free giveaways, televisions, some gift cards, and maybe a free month's rent.
Right.
And that's great for the residents. But what we're down there doing, and by the way, we go, right? Myself,
Mhm.
Mark, you, Joe, in past events, the entire team actually came, and we're spending time with the residents,
Mhm.
getting to know them, hearing about their lives, figuring out their stories, and just loving on them.
Mhm.
And we actually had our team at Asset Living after our first successful event at Largo, our first
Mhm.
deal, say they've never ever seen the actual owners or operators ever show up to an event like that
That's
before.
right.
So it's just those small things, it
Yeah.
really shows that, I think for the resident, when they see a building sell, and it's the idea that apartment buildings trade like every 4 to 7 years. So there's residents, you mentioned that one at Georgetown, been there for 25 years. They've
Mhm.
probably seen 3 or 4 owners. And so what often happens is the building sells and then rents go up, but nothing really else
Right.
changes. And in some cases, maybe it gets worse because the maintenance isn't handled well and all these various things. And so when we show up, I think that just sends that message that we care and
Right.
it's not a fake thing. And, I was thinking about the Largo event recently because I don't think Mark stopped talking or sat down for 4 hours. I mean,
We didn't see
I
him.
think he met
He
literally every
spent all the
resident,
time with the
right?
residents, right.
Yeah,
He really
yeah,
did.
yeah.
I think the
So
other thing that we do as well is, a lot of times operators, there's a disconnect between the on-site property management team and the ownership, right? The ownership seems to be untouchable and elevated, and the residents can't get to them, right? And in Georgetown last week, I'm handing out my card with my cell phone number on it and my
mm,
email, and like, look, if you have issues and you're not getting what you need to call me and you need to tell me.
yeah,
I think that's one of the things too. As an asset manager, there's a balance between controlling my zoom lens, right? Getting in the weeds, but then also being able to zoom out and be high level.
yeah.
But I love being in the weeds. I love getting in there and helping the residents. And that's my favorite part, honestly, is the takeover. Yeah.
Yeah, that's awesome. Well, very cool. I think this was a great primer for our investors, the listeners, to just learn a little bit more about the role of asset management in multifamily
Yep.
investing. Once again, go to fulloutinvesting.com if you'd like to learn more. It's a great resource, sample deal deck, a video that outlines our 10-step process from acquiring to exiting our investments. We love and believe in you. If you've liked what you've heard today, please like and subscribe and share with another high net worth investor and keep dreaming and investing big.